now. Well, with gold hitting new heights, some individual investors are starting to take another look at the precious metal as an investment option.
But is it too late to jump on that bandwagon? Joining us now, our favorite gold bug, Peter Schiff, president of Euro Pacific Capital and author of Crash Proof 2.0. Peter, you were recommending gold back when it was in the 800, 700, 600. You've always liked gold. Go ahead.
Since I first been on television with you, I think in 2004, I've always recommended buying gold. Gold was in, I think, the 300 or 400s back then. I really started buying it for myself and my clients back in 1999 and 2000.
At what price?
And, well, I started buying it at 270 or something like that. I mean, if people 10 years ago, if someone put $10,000 into gold, that's probably worth about $40,000 today. Whereas if somebody put $10,000 into the S&P 500, it's probably worth closer to $8,000. So gold continues to do well. And every time I come on television, people keep asking me, is it too late? Is it the top? I don't think we're anywhere near the top. As long as we continue to debase the money, as long as we keep stimulating the economy with printing money, the dollar is going to keep falling, gold is going to keep rising.
So where is the top, Peter?
I don't know. There's no necessary top because there's no low to the dollar. What gold simply tells you is what the U.S. dollar is worth or what other currencies are worth. It's a measure of purchasing power. So as the dollar loses value, you need more dollars to buy something like gold. Gold is not changing in value. It's the dollar that's losing value.
But give me a specific number. Do you think it's going to go up to 1,200 before the end of the year or something like that?
Oh, sure. Look, it's going to go to several thousand. My guess is at least 5,000 before it's over, but it could go a lot higher than that. It all depends on how long we wait before we get our act together and recognize that we're doing everything wrong right now.
Peter,
and that until we change course, gold's going up.
Hello to you, Mr. Kaiser. Now, is China trying to reduce its dependency on the U.S. as trading partner?
Sure, China would love to reduce its dependency on the U.S., and dependency is a good word. The U.S. dollar has become the opium of international trade, and China is addicted to U.S. opium dollars. Remember, the U.S. loaned China over $1 trillion so that China would be able to export lots of products back to America, but America has absolutely no intention whatsoever of repaying China that $1 trillion. America will never pay China back that $1 trillion, and they're forcing China to buy more dollars to keep their own currency from rising, thus killing their export market. That's why China is buying lots of this stuff, gold bullion. They can't get enough of gold bullion. India's buying gold bullion. China's buying gold bullion as a way to hedge themselves against these things. This is Warren Buffett toilet paper. Warren Buffett toilet paper here, the U.S. dollar. It's going to zero, and China has got itself into a conundrum because their entire economy is based on U.S. consumers buying Chinese products financed by the U.S. Moving a tremendous amount of paper through the system, and that paper is now becoming worthless.
Well, speaking about the economy, the economic situation in the country and the Chinese attempt to weather the economic crisis, how important is the stimulus of domestic demand in China in relation to that?
Well, it's very important to try to get their economy going with their domestic stimulus program. But they are building a lot of worthless projects. If you look at some of the projects they're involved with, they are what are really you could call ghost cities. Their GDP numbers are a bit inflated, and they are trying desperately to manage their domestic economy and to grow their domestic economy. They're doing lots more trade with countries like Japan and South Korea, again, to get themselves away from this U.S. dollar dependency. You know, it wasn't only back in the 1850s or so when China was hooked on opium as part of the opium wars that were in progress with the United Kingdom. This is kind of a current version of the opium wars, but instead of the opium, America is getting China addicted to this worthless piece of paper. And they can't get enough of them because they have a dependency on U.S. dollars. And they need to get over their U.S. dollar dependency one way or another. And as you point out, they're trying to increase their domestic economy. They're doing business with other countries outside of America, including Japan and South Korea. And they're buying this stuff, gold bullion, as is India and other countries, to extricate these countries from the stronghold of worthless U.S. dollars.
Okay. Well, China and the U.S. have a complex trade relationship. So in this connection, how effective will President Obama's visit to China be in ending the numerous trade snipes between the two countries?
Well, Barack Obama is not going with much in terms of leverage to try to get any of these partners to the table in any meaningful way, unless he wants to sell China California, which I would imagine Governor Schwarzenegger would be ready to sell China California as a way to try to rebalance the incredible imbalances between these two countries. Other than that, or selling China all of America's roads, tunnels, and bridges, or something of value, the only thing Barack Obama has are more dollars. And the Federal Reserve and the Treasury and Goldman Sachs and J.P. Morgan are happy to just keep printing dollars. And so China is forced to buy dollars as a way to prevent their own currency from rising, which would cut off their export market. So yes, it's a very intricate relationship, but China is still dependent on the U.S. Situation in terms of their markets, and they're scrambling desperately to get out from underneath this dependency and to recover, to become really, they should start a program in China called Americans Anonymous, which would be a program to get themselves over their dependency and addiction to American dollars and the American economy.
We said you made your name in gold. It's hit a record in the last 24 hours, this show. An obvious question, Jim, how high is it going to go and how fast?
Mark, you should watch Bloomberg if you want to know how high it's going to go. I don't know. I suspect it's going to go over $2,000 sometimes during the bull market, but depending on what happens in the world, it could go much, much higher. The old high back in 1980, adjusted for inflation, would be over $2,000 now, just to get back to the old high. So it'll certainly get there sometime in the next decade.
Have you been taking part in the recent rally? Have you been adding to your gold holdings?
I own gold. I have not sold any gold. I'm not thinking about selling my gold. If it goes down, I'll buy more. But Mark, if it goes up, if America bombs Iran and it's going up, I'll probably buy more. I'll jump into the panic.
I mean, you mentioned a couple of $1,000s an ounce, Jim. We've heard all sorts of forecasts here on Bloomberg. 2,000, 3,000. John was just telling me that he spoke to a fund manager last night who was talking about 4,000. I mean, is this pie in the sky, Jim, for gold?
Well, look, if the U.S. dollar collapses, then 10,000 is not pie in the sky. It's in worthless U.S. dollars, so it really wouldn't matter what happens. What kind of pie in the sky? I don't have any idea. If people are starting to throw those kind of numbers around, we're probably ready for a correction, or it's overdue for a correction. Anything that's been going straight up for a while usually has a consolidation, so maybe that's what's about to happen.
Jim, you've been
saying it will certainly go over $2,000, Mark.
It will certainly go over 2,000. You say if the U.S. currency, if there's a crisis, Jim, you know, gold will surge, and you have said this year there may be a currency crisis within the next year. I mean, do you still stand by that? And which currency could be at the center of that crisis? The pound, the dollar? What do you think?
Well, I'm sure there's going to be a currency crisis or a semi-crisis sometime in the next year or two. We have huge imbalances in the world economy and the world financial system that has always led to currency crisis. I mean, it may sound radical, but this is the way the world has always worked. I don't know where it'll start. It could be the pound sterling. It could be the U.S. dollar. Usually what happens, Mark, is something we're not thinking about, you know, Argentina or Ukraine or who knows what, and then it snowballs, and the next thing you know, you have wild currency gyrations, people making and losing fortunes. Just watch it, learn about currencies for the next couple of years.